Hello everyone and welcome back to the Option Writer. What I want to do this weekend is go over all of our positions that we currently have for May expiration. Again, that's all of our positions that we currently have for May expiration. Now I know that this is going on the public blog, but I'm not afraid to show any of these positions because they're all pretty much worthless. But what I wanted to show is how we built these positions when we enter these positions. That way everyone gets a good idea of how we build our portfolios, play the market moves. Again, none of our positions are in jeopardy of losing money at all, and that's tough to say for some other services out there, especially services that have iron condors and that have spreads. This is the premier strategy, and the reason it works so well is because it's so immune to huge market moves, and I'll show you exactly what I mean right here in a second. The first position that we had for our May portfolio, and again, we started building this in March and April, is the 90 put. And you can see that this is well below the market. It's even well below the February lows that we had on the DIA. And this really means that anytime the DIA closes above 90, anywhere above 90, we will make all of our money that we sold on our premium for our option. So the DIA could close at 112.50, it could close at 100, it could close at 95, it could close at 90.01, and we would still make all of our money. So again, completely profitable, and you can see how far away from the market this position really is. And that's really the key to our strategy. Now, a lot of other strategies and services and websites out there, whatever whatever median they are, they focus on strategies like iron condors, butterflies, spreads, etc. For those types of option strategies, you have to get really close to the market. Because you're entering multi-leg strategies, you're entering puts and calls and this and that all at the same time. You have to get really close, and your strike prices have to be really close up here. And a lot of services got way knocked out this past Thursday when the market took its dive. We, on the other hand, didn't even blink our eyes. It was even at the lowest low, we still had plenty of room to go on our positions. The next position that we entered was a SPY 100 strike put. Again, you can see that we're still going with the puts as we were starting to build our portfolio. Again, knowing that we were building it in March and April, and the market was topping out here, and we knew that with our odds calculators. So we wanted to build positions on the bottom side of the market. Again, you can see that even at the lows of last Thursday's huge sell-off, the SPY only came down to around 105, and our strike was at 100. So even if it closed all the way down here at 105, we would still make all of our money for our position. That's hard to say for some other services. And finally, the last two positions that we have for the May expiration are the 75 strike call on the IWM and the 55 strike put on the IWM. Now you can see the 75 strike call did actually come pretty close to where the market was hitting, and for calls all we need is the market to close anywhere below our strike price. So for both of these positions, both the 75 call and the 55 put, so long as the IWM closes anywhere between those two levels, it could close at 72.50, 65, 60, 57.50. As long as the IWM closes at the end of this week anywhere between these two levels, we make money completely on both of these positions. Now the 75 strike call, we had a lot of people who were calling us and wondering what to do on this. A lot of members were getting nervous as it was starting to creep up here, but these last 2 days here, really at the end of April, where it got really close to our strike price, if you use our odds calculator, you would have known that there's about a 96% chance that the market would fall away over the next week, and that's exactly what it did. And that's not based on any type of hope, dream, anything like that. That's statistical analysis. That's historical probabilities and market moves. That's hard data that we use, and we always use that to trade. So we stayed in this position, we didn't adjust it, and that's exactly what happened. The market just fell away here, and this position became extremely profitable once again. So that really ends the video for today. This coming up week should be pretty interesting on the markets. I'll go to a chart here of the SPY. We know that we had some pretty good selling here Thursday and Friday. I would assume the market would come back down to around the 1100 range on the SPY. From there, we could see a small bounce back up into around the 1160, 1150 range toward the end of the week. That ends the video for today. As always, happy trading.